Welcome back. Here we are at this point of 8,20,000, which I was looking at. While there is a small correction to be done here, because while balancing, we have not taken all the items. So, coming to investing activity. So, what comes in the investment? You find that the machinery has been purchased, which is part of investment, and then you find that land has been purchased, which is 1,25,000, that is an investment, and you also see that a sale of asset happens, that is your investment being sold away. So let us understand this way, that whatever amounts that come as cash here, see for example you have 3 lakhs here and 5,20,000 on the debit side of the asset account. That means that you have purchased assets. So what's the total amount that you have purchased? 3 lakhs plus 5,20,000 is 8,20,000 that you have purchased. Whenever you make a purchase, cash outflow happens. That's the reason you find negative number here. Similarly, in the case of land, in the debit side, when you find cash, you have made a cash payment to purchase this land, 1,25,000, a negative number here. While in the case of machinery, you find that there is an amount of cash on the credit side, which is 2,15,500, which has been told in the problem that the company is actually wanting to sell away this old machinery to make way for the new one. So you have sold away this 2,15,500. The company has sold away 2,15,500. Thereby the cash receipts happen, and that's what is here. So two negative numbers, which is because of buying of the assets, and one positive number because of the sale. So net you find that because of the investing activity, you have actually paid 7,29,500 to make way for the investments. Now let us look at the financing activity. When you look at the financing activity, you find that whatever are the equity capital, changes in the equity capital, the long-term loans, that is whatever you bring in for financing your activity comes into the financing part of the cash flow statement. So we find that there is this treasury stock, retained earnings, common stock, dividends paid. So these are the financing activities. Added to that, the long-term debt and any other thing, yes, the debt which is short-term. So all the debentures, all the debts that you raise, whatever funds that you raise from the market and you pay back, and whatever amount of interest that you pay for that, and the dividend that one pays, is part of the financing activity. Let's see how it appears here. So the long-term debt, if at all you look at the long-term debt, what's the long-term debt here? Earlier it was nil, and right now it is 5,10,000. That is a debt of 5,10,000 has been raised. So there is a cash inflow because of the loan that you have taken. Similarly, the short-term debt was what was the short-term debt here? It was nil earlier. Now it is 2 lakhs that you have raised the short-term loan of 2 lakhs. There's an inflow of cash here to the extent of 2 lakhs. Now, when you look at this problem, in the problem, the promoter was speaking about a shareholder who seems not to have, who seems to be in some monetary difficulties, and he is actually willing to sell away his shares, where the company is interested in buying away these 20,000 shares at a rate of $1.3, which will mean $26,000, and that's what has been the treasury stock repurchase, $26,000, that you can also find it in the balance sheet here. Treasury stock, 26,000. So what happens here? The money is flowing out of the organization. That's the reason it's minus, and the dividend has been paid. 10,000 rupees of dividend, which was actually proposed earlier, has been paid in the current year, and then again there's another 12,000 that you have to pay. So 10,000 has been paid, and the interest which was earlier taken as an operating activity in the P&L account, which was adjusted here as 58,750, which you added back because it's no more an expense over there, has been brought forward here. 58,750 you subtracted here. So net what you find here is that the cash, because of the financing activity that has been raised by the organization, is 6,15,200 50. Now, what's the total cash inflow because of these three activities? One is the activity is 10,740 cash from operations. Your cash outflow because of the investment 7,29,500, and cash raised because of the financing activity 6,15,250. Put together, you find that there is a net decrease in your cash equivalents, that is 1 plus 2 plus 3. You are having or losing out on cash to the extent of 1,03,510. Losing in the sense the cash outflow is $1,03,510. Now here, let us see, if you have lost this much, what was the cash balance at the beginning of the year? What was the cash balance at the beginning of the year? If you see, the cash balance was 1,13,000. So to the amount that you have lost, you add back this, or the amount where there is a negative flow of cash, to that you add back $1,13,000. So what's the cash that is left out? 9,490, and that's what you have in your hand right now, 9,490. And that's how you see that the money that you have actually either lost or you have raised is all put together is the cash balance or cash and the cash equivalents at the end of this year. Now, as per the case, there were three questions that we said that we'll be looking at, because the first one is using the cash flow statement using the indirect method. The first part is done. The second one is out of the scope of this discussion. The third one, what are the main sources and the uses of the cash revealed by your analysis? I see that the main area or the main source of cash that is being lost, or rather cash outflow, is because of the investing activity, and you are raising, or the money is being raised by financing activity, 6,15,250. But if at all I have to still take this as a part of a short-term loan, then I see that the amount that has been raised is 4,15,250, while for the long-term purpose, the amount that has been invested is 7,29,000, which there is a huge mismatch between the money that has been raised for long-term purpose and the money that has been invested for long-term purpose. This is one thing which I notice as a part of my analysis. And next thing is that I find that though the company has been making a profit of $1,18,995,000, but it is always it has been left over $10,740 as its profit, that is cash operating profit. The company is having less cash when compared to the profits that has been reported in the P&L account. That is, the cash operating profit is far less than what has been reported as the profit of the organization. Well, the profit seems to be very good, but then at the same time, when we look at the cash that is generated because of operating activities, seems to be only 10% of what it is shown as a profit. Well, this is what happens when there are more of non-cash activities happening. Let's see what is the liquidity position of this organization. Now here, if the organization has got these expenses, I just have taken these expenses from the income statement, material, the labor, the rent, the utility expenses, advertisement and all. If at all you take all those things, the organization needs anything to the tune of 16,39,950 as the expenses. Total expenses, when I take the total here, it is 1,69,000, 63,000. Oh, I'm sorry. It is 16,39,950. So the company needs 16,39,950 as the expenses for the entire year. So let us just see if at all what will be the company's daily expenses that it will need to pay from cash. It is 16,39,950 divided by, say, you have got 365 days in a year. So the company needs $4,493 per day. This is per day to meet its daily expenses. It will need $54,493, while what is the amount that the company has got in form of cash? It has got 9,400, and so I just put in this is 9,490 divided by what is the money that I have got here per day. So I will be able to actually survive for only 2.1 day with the amount that I have got, 9,490. I have got 9,490. I can survive only for 2 days with the kind of expenses that I have got. 16 lakhs and odd is my expenses. For this, I will be able to meet only 2 days of expenses, because on a daily basis I need $4,493. Now, the next thing what they have asked is that what would you recommend to Bennett Alexander? My recommendation would be that because his expenses, that is the earning cash operating profit, seems to be very less, and his investing activities, the amount that goes into investing is 7,29,000, which is a huge amount. I recommend him to go a bit slow on this part. Maybe instead of going in a instead of going for a large facility, maybe he can postpone it or defer this idea, so that he can actually save himself from getting into liquidity crisis the way we see here. So that is one way. And second thing is that when I said that, because he has, see, this is what is his amount that he has raised, because totally he has got 6,15,250 that has been raised from the market. But while if I remove the short-term debt, he has raised 4,15,250 from the market. That seems to be a very small amount when you compare it to the investing activity, which I have already told you. And next thing is that instead of making the dividend payment, it would be good if the company actually does not pay the dividend. Instead of raising the loans from the market through long-term debt, it would also be a good idea if the company would actually raise funds from equity shareholders. That would also be a good idea, so that one can actually cut down on payment of interest, that is the servicing part, which is 58,750, which is as good as if at all I have to see this amount of 58,750 to the amount of financing that is happening. I would say that it's almost 10% of amount that goes to servicing of the financing activity. To avoid that, one could actually take up this, instead of going for the long-term loan, you can actually go for raising the equity from the market, thereby reducing the cost of finance. Another thing which I see is that the very first question which he was talking of is the very first point. He says that the wholesalers are right now asking for 40 days of time to actually make the payment, which earlier they used to make the payment in 30 days. So that means that here too the company should go for negotiating for a better recovery or short-term duration of recovery. Instead of 40 days, it should be 30 days that they should be actually asking for the payment to be done. So that can actually save on raising working capital. So thank you for being with me. All the best.